market. And now we have a lot of listeners that want to understand more about that, how the institutions or the successful are creating cash flow by using these markets. Now, we know the stock market exists. Everybody knows that. That's pretty much all they talk about on TV. Now, there's multiple asset classes where us as investors can participate in. Let's talk about those other asset classes and why the institutions or the successful are utilizing those that are also available to us to create that cash flow.
Well, it really is interesting when you think about it. If you look at the institutions, the financial advisors, what they are putting their clients into, which is pretty much the public, the retail traders we call the public, they're putting them into mutual funds and annuities and maybe some individual stocks. What about the pros? What about the successful institutions? Well, sure, they can trade stocks. They're not trading mutual funds. They're not buying annuities for themselves. They are using the other assets that we talk about a lot on these shows, and we go into these in these classes that you're giving tickets away for. We're talking about the futures market, the foreign exchange market, the options market. The smallest of all the markets is the stock market, yet that's what most people are put into.
That's unbelievable. A lot of people think the stock market is the almighty. It's the smallest.
Right.
It's
crazy.
The
one that most people know about, and that's what, if they're in mutual funds, basically are just a grouping of stocks. So why do the institutions, why do the successful pros trade something different? Well, there's a number of different reasons. One is that, and you had mentioned the difference in income. Why, how these successful investors and traders and institutions are trading for, let's call it, short-term cash, as opposed to a long-term hold. Well, if you're going to do that, you need to do something that actually has a short duration to it, or potentially short duration to it. Stocks really are intended for, and probably the best asset for long-term portfolios, for wealth building over time. But if you're looking for something that might be needed within a month or a year or two, and not 10 or 20 or 30 years, that might mean doing something different. That's why the institutions are trading and investing using these other assets.
Is that what you mean by short term, is just being able to access that, right?
Exactly. It's like that somebody has an emergency or some bills, or maybe the bills, the cash that's going out of a person's account is greater than the cash coming in. The bills exceed that, in other words. Well, you can't wait 20 or 30 or 40 years to cover that gap. Futures is probably the best short-term trading vehicle, and that's where you're looking at the value of something in the future, down the road. What is it going to be worth? More or less than it is now, and an individual and the institutions can go either way. And by that I mean they can go long or buy, thinking it's going to go up in value, or short, sell it and go short, which would indicate that they think it's going to go down in value.
So let's talk about that for a second, because the market was down this week.
Correct.
The average investor probably lost.
Exactly.
Now you're talking about shorting, which means when the institutions or the successful that know how to do that, you can profit in down markets. Is that correct?
That is correct. If anybody has a stock portfolio or a mutual fund portfolio, the ability to benefit is only one direction, and that's in an up direction. And for most people, that's their 401ks or 403bs or an IRA. That's a one-directional kind of a portfolio. The market doesn't just go up, we see that. Sometimes we see it go multiple directions in one day. And again, a long-term holding type of a strategy isn't going to work if somebody wants to try to take advantage of these shorter-term moves. Futures is probably the shortest term. It has the potential for the shortest term. In other words, by the time that somebody has an entry identified and a target identified, it can be happened within a day, sometimes within hours, or maybe a couple of days. Great for very short-term cash needs. The foreign exchange market, where you're looking at the difference in exchange rates between two different currencies, again, can be used short-term and also can be used long-term for retirement or wealth buildup, and then options can be used at different time frames. And futures and Forex, by the way, trade 24 hours a day, which give you great versatility there as to when you can take advantage or have the opportunity to take advantage of what's happening, not just 6.5 hours that the stock market is open.
Yeah, I want to talk about that a little bit more, but we have, you mentioned a couple big things there. We talked about the futures in the Forex market, but there's shorting. So that's, how the successful or the institutions, that's how they profit in down markets. Now, this is also available to us, the average investor. So, we can